What's up guys, welcome to another free stock market breakdown video. In this breakdown, we're going to be taking a look at a few instruments where I see some trading opportunities brewing up. Remember to drop a thumbs up on this video and subscribe to our channel if you like the content. Also remember to turn on your channel notifications so that you are notified every time we upload a video. Follow us on social media to keep up with our educational content and so you never miss any important market news. All the important links to our channels are in the description area below. So let's get right into it. So we're starting today by taking a look at the S&P 500, and as you can see, we hit our take profit 2 level that we had from our initial trade idea from December last year. So essentially this trade is completely closed out, so ignore the rest of the analysis that I have on this chart because that's for later on in this video. But essentially we did end up hitting our take 2 profit level of 3,820 points late last week, which is kind of what I expected, and given the news that the Democrats have won the Senate, I did expect this to happen. Now moving on to the potential trade idea that I'm seeing for next week is essentially a similar trade idea wherein we have a continuation of upside momentum up to this take 3 profit level I have highlighted here. So if you've already closed out the trade that hit take profit 2 level, that's fine. I'm looking at another entry opportunity occurring back at our take profit level 1 around 3,745 points. And of course, if you can see this line here, we are clearly in a well-defined uptrend, and I am expecting some form of continuation throughout this. As you can see, we did get some resistance right exactly at our take profit 2 levels. So I am looking at some weakness creeping into the market at the start of the week, but I expect quite a swift recovery, especially going into Biden's inauguration. And of course, the Democrats are looking at passing a $3 trillion stimulus package. So this should help all equities, especially US equities. So definitely keep an eye out on this trade idea. And once we get that pullback into support, I will be looking to get approximately a 2.75 to 1 risk to reward ratio out of that trade. Now moving across to the NASDAQ, as you can see, we have also hit our second take profit level in this instrument. And of course, it's for the exact same reasons that I highlighted in the S&P 500 analysis. All of the US indices are heavily correlated, so it comes as no surprise that this has happened. So I'm going to delete this trade idea as we did take quite a few points out of the market. I believe we entered this trade around here, around the 11,800 point level, and we took it up around 1,200 points. So definitely very happy about that. So any other entries into the NASDAQ will be contingent on us hitting both a support level. So in this case, I am moving my next support level to around here. So if we get any pullback into this zone, this will just be a simple trend continuation trade with our stop loss below the support zone, as well as this uptrend line that is containing our rally. I will be using a fixed risk to reward ratio of around 2.5 to 1 just to manage our risk a little bit better, because we are getting to a point where we have been in a rally. As you can see from the highs back in March, we have heavily surpassed those highs and price is still pushing up. So as long as we are continuing to get bounces within this trend, we will just keep on taking longs in this position until we eventually get stopped out. So that's my only recommendation for the NASDAQ, given the price action that we have seen, is that it is quite a safe assumption to make that we can take longs from this trend line here and any support level that intersects with it. Now moving across to the beast of an asset in Bitcoin, which I've done multiple videos on so far over the past few months. I am definitely starting to see what I was looking for a little bit prematurely, and that is some weakness starting to set into this instrument. So originally I did think that we would get resistance here around the $30,000 level, but of course that did not happen, and Bitcoin flew straight above $30,000, setting an all-time high of around $42,000, and we haven't looked back since. But that is why we do have well-defined entry criteria for any of our trades, so that we stay out of bad trades and we don't get into them too early, just in case situations like this happen. I'm never going to be right 100% of the time, but what I can do is give my perspective and look for areas where things are likely to take place. So now Bitcoin has rallied to an all-time high of around $40,000. I am starting to see that well-defined weakness enter into the space. And if I jump up to the weekly chart briefly, we can see quite significant contraction in the new weekly candlestick that formed when the market opened today. If I briefly switch over to Japanese candlesticks, we can see just how long this wick was up here, and that we did actually close around $3,000 lower than our all-time high. So I am looking for this weakness to continue into the week, and I would be looking for some short-term trade idea in Bitcoin if the following entry criteria is met. What I am looking for is us to have an eventual break on the Heikin-Ashi candles and close below this $34,000 level. The close is very important because that does signal downside momentum. I am looking for price to retest this zone, which is where we will execute our shorts, and then push down to this $28,200 level. And that's what the trade idea would look like. I'm about 60% confident that that will happen, but of course 60% is not 100%, and there is quite a significant chance that we could enter this level once again and just have another complete bounce, surpass these highs, and continue even further to even higher highs. But given how strong we have rallied and the significant levels that we have passed, I am looking at some form of correction happening. I've been anticipating a correction in Bitcoin for a couple of weeks now, and I do think that the signs are there for that happening, as this is the first time in quite a long time that we have seen quite a significant red candle enter the Heikin-Ashi candlesticks. So if we do eventually break down below this level, I will be looking for us to pull back and retest this trend line here that we have highlighted in our chart, and also retest this supply and demand zone here around $28,000. But like I said, I'm about 60% confident there is a chance that we do continue higher, but personally I will be waiting for this opportunity to happen. And of course, if we do end up pulling back down to this level, this is your chance to get into Bitcoin and execute longs, as this is quite a significant level of support given the trend line that we have broken, and also given the fact that this is quite a significant support level just below the $30,000 level. So if you are bullish on Bitcoin, look out for this, and if you are a person that does trade Bitcoin or trade cryptocurrencies, look for shorting opportunities below this zone. Now moving along to an instrument that you guys aren't really used to seeing me analyze, I am looking at the Australian Canadian dollar, the Forex instrument. So looking at the currency markets, and I do see quite a nice trading opportunity to the downside in this instrument, given the fact that we had quite a significant rejection off of a major daily level, followed by quite a common price action pattern, which is a double top, and that now we're starting to get that downside momentum in this instrument. So what I would be looking for is the Heikin-Ashi candlesticks to break below the 200 period moving average, which is also in line with quite a significant supply and demand zone. I will be looking for price to retest both the 200 period moving average and this supply and demand zone, and then have a push down all the way down to around 0.9745 as our take profit level. But I will be cautious about taking our trade all the way down to here as well, as there is quite an important supply and demand zone running all the way through this level at 0.9782. So just to be a little bit cautious, I will be taking some of the profits off the table at this point, and then I also will be bringing the stop loss down to break even at this point as well, and that way we are in a risk-free trade. But of course, all of this is dependent on these Heikin-Ashi candles breaking below this area, and then of course pulling back into the zone to retest it. But this is definitely what I think is quite a good trading opportunity, one of the best ones that I've seen in a while for this Forex instrument, as there are a lot of areas of confluence with the moving averages and these supply and demand zones adding up, as well as we are getting quite significant bearish momentum into this instrument, especially given the news that has come out. So definitely pay attention to this, and if you take the trade, definitely drop a thumbs up on this video and put a comment in the description below. And this brings us to the end of our free market breakdown video. So thank you to all you guys who have taken the time out to watch this video. Definitely appreciate the support, and an even bigger thank you to those of you who have made it to this point in the video. I will be doing a lot more videos covering a variety of topics, and if there's any topic that you guys would like me to cover, definitely drop a comment below and I'll definitely get back to you, and I will probably end up making a video on that topic. If you're not subscribed to the channel, make sure to subscribe to the channel so that you can keep up to date with all the content that I post. And if you found this video useful, help us out by dropping a like on the video. Thanks, and peace out.